Welcome to the weekly market update brought to you by Softlogic Stockbrokers. The shortened trading week was wrought with mixed signals. The ASI hit new highs towards the beginning before declining 7.8 points week on week to close at 10,658, while the more liquid S&P index gained by 75 points, closing at 3,691. Investor interest centered around diversified financial, capital goods and transportation sectors, reaching a cumulative total of 36.8 billion rupees, with net foreign selling topping 1.4 billion rupees. On the macroeconomic front, the Purchasing Managers Index was up by 6.1 points in October compared to September, which was a 7-month high, which is the strongest rate of growth in services since March. Imports continued to balloon to $15 billion for the first 9 months, despite restrictions and shortage of foreign exchange, with the trade deficit widening to $6 billion. However, exports remained resilient, crossing the 1 billion mark for the 4th consecutive month. Profits from listed corporates topped the pre-pandemic record, reaching 110 billion rupees. The September quarter's earnings were up by 48% year-on-year despite the third lockdown. Cumulative 9-month earnings of 292 billion surpassed all historical 12-month earnings of the CSE. Key factors for this rise in earnings were attributed to pent-up demand cycles, protectionist policies, import restrictions and expansionary monetary policies driving down interest rates. These are some of the crossings and dividends for the week. Some other notable news for the week. There was a marginal revival in tourist numbers in the month of November, boosting revival plans for the COVID-hit industry. Sri Lanka also received a big boost at the World Travel Mart, hosted in London, where 50,000 travel and trade professionals commended Sri Lanka's proactive measures to revive the industry.
Moving on to the technicals, the all-share price index was unmoved on its final close for the second straight week, signaling uncertainty in the market. Sentiment was mixed, as the week started with rallies in illiquid counters and ended the week with a good pickup on fundamental counters. If the all-share price index is to have a pullback, prices are likely to find support between the 9,700 and the 10-week moving average, with 10,000 likely acting as a psychological support level. So far, the two indices have diverged with each other. While the all-share price index has moved higher, the SL20 has continued on a correction. Bearing in mind the latter part of this week, investors would be better off focusing on the SL20 to have a better sense of market direction.
Thank you for joining in. Hope to see you again next week.